There's a 195-year-old Singapore company quietly powering smart cities, hydrogen tech, and data centers, and it's trading at just 7 times earnings. It's profitable, future-ready, and still flying under the radar. Welcome to Durian Finance, your trusted guide to smart investing across Singapore, Malaysia, and the region. Whether you're a dividend hunter, a value investor, or just someone who's tired of overhyped tech stocks with no earnings, you're in the right place. Here, we cut through the noise to uncover real companies with real profits. And today's spotlight, Boustead Singapore, might just be one of the most overlooked multi-sector gems on the SGX. So stick around, because in this video we'll break down its fundamentals, future growth potential, and why the market may be seriously underpricing it. Disclaimer: this video is for educational and entertainment purposes only. It's not financial advice. Always do your own due diligence and consult a licensed financial advisor before making any investment decisions. Boustead SG, ticker symbol F9D, is a storied local conglomerate dating to 1828. Today active in 4 key areas: geospatial, energy engineering, real estate solutions, and healthcare. FY 2025 revenue was 527 million Singapore dollars, down from FY 2024 due to one-off transactions, but net profit rose 48% to 95 million Singapore dollars, bolstered by a gain from transferring its fund business to Unified Industrial. Importantly, its debt-light just 6.8% debt-to-equity ratio, with 345 million Singapore dollars in cash, and delivers strong ROE at around 18%. How often do you get exposure to smart city tech, green energy infrastructure, data centers, and healthcare, all in one blue chip with no debt? Let's break down how Boustead Singapore makes its money, and more importantly, why it matters for investors like you. First up, the geospatial division. This is the engine behind smart cities and digital infrastructure. Boustead distributes Esri ArcGIS, the world's leading geographic information system, used by government and companies to build digital twins, analyze infrastructure, and manage climate resilience. In FY 2025, this division delivered record revenue of 221.4 million Singapore dollars, its best performance ever. Even more promising, a 149 million Singapore dollars deferred services backlog, which means sticky, recurring income is already locked in. They also run Boustead Geospatial Technologies behind hit products like Smarter WX and Giovanna Connect, serving over 50,000 monthly users across Australia and Asia. This isn't a mapping tool. This is the future of infrastructure planning. Next, energy engineering. Here, Boustead builds systems for heat recovery, gas processing, and emissions control, solutions that help energy companies run cleaner and more efficiently. Even in a choppy market, this division brought in 158.9 million Singapore dollars in revenue in FY 2025. That's only a slight drop from the prior year, a testament to its resilience. With an order backlog of 126 million Singapore dollars, Boustead is still getting calls from the world's top 20 energy players. They're not betting against renewables. They're helping energy giants transition there. Then we've got real estate solutions, also known as Boustead Projects. This division designs and builds industrial facilities, pharma plants, logistics hubs, and now data centers. Yes, revenue dipped to 134.3 million Singapore dollars this year, but that's old news, because Boustead just secured 377 million Singapore dollars in fresh contracts, including a 90 million Singapore dollar data center complex in Malaysia, a pharmaceutical plant in Tuas, Singapore, that pushes their current order backlog to 349 million Singapore dollars, setting the stage for a strong rebound. This is Boustead's smallest but fastest growing arm. They provide rehabilitative care systems and mobility solutions focused on Asia's aging population. In FY 2025, revenue rose 14% to 12.1 million Singapore dollars, thanks to a turnkey contract win. While it's not wildly profitable yet, they're near break-even. The division is shifting from product distributor to high-margin service provider. That means stickier clients and recurring revenue, just like in geospatial. So, what does this all mean? You're not buying a single sector bet. You're buying smart infrastructure, green engineering, industrial property for the digital age, and healthcare innovation for Asia's future, all from a company with nearly no debt, over 345 million Singapore dollars in cash, and a track record that's nearly 200 years old. Now, let's talk about what's coming next. Why Boustead may be just warming up. Record contract wins and backlog growth. In FI 2025, Boustead project secured 377 million Singapore dollars in new contracts, including a 90 million Singapore dollars data center complex in Malaysia, a pharma facility in Tuas. These boosted its order backlog to approximately 428 million Singapore dollars, 25% higher than FI 24. That's not just a bounce back, it's a leap forward. Digital twin leadership. Singapore's first maritime digital twin was launched in March 2025, with full operations expected for H2 2025. Boustead, as an ESRI partner, is uniquely positioned to capitalize on this trend, providing the GIS software and expertise to map and simulate complex maritime environments. Green data centers. IMDA plans 300 megawatts of additional green data center capacity in Singapore. Boustead Project's expertise in low-carbon infrastructure and data center builds positions it to ride a major national growth wave. UIB stake in capital reallocation. The transfer of its fund/property arm into UIB gives Boustead a 24.1% stake, unlocking capital to invest in high-growth regions like Japan and China. Frontier growth segments. Hydrogen, renewables, digital mapping, smart infra, and climate tech are in early stages across APAC. Boustead has an ecosystem and track record to scale with them. So near-term catalysts include strong contract wins plus backlog rebuild, while mid-term drivers are digital twins, green infra, and strategic capital allocation via UIB. A digital twin-enabled port, green data centers. A pharma hub in Tuas. Boustead is laying the foundations for its next growth chapter. Are you on board? Now, let's walk through the numbers and why they point to an undervalued opportunity hiding in plain sight. Here's how Boustead stacks up. First up, P ratio. Boustead is trading at just 7 times earnings. That's incredibly cheap for a company with this level of profitability, diversification, and future-ready infrastructure exposure. Most comparable tech infra peers on the SGX trade at 12 to 20 times earnings. So you're paying a discount for something that arguably deserves a premium. Next, price to book. It's sitting at 1.18 times book value. That's just slightly above the company's net asset value, which rose to 118.3 cents per share in FI 2025. Think about it. You're buying a company almost at asset value, but with strong earnings and cash flow on top. That's classic deep value. Now look at dividends. They're paying out 7.5 cents per share in FI 2025. That gives you a dividend yield of around 4 to 4.3%. And they're only using about 15% of their earnings to fund that payout. That means the dividend is safe and has plenty of room to grow if earnings normalize. Finally, dividend coverage is strong. Their earnings per share is more than double the dividend payout. That's a 2 times coverage ratio, much better than the SGX average. Boustead Singapore combines heritage, balance sheet strength, and structural growth. You got government-backed megatrends, strong order book, new revenue streams, all at a deep discount. If you found this walkthrough useful, hit like, comment below. Are you buying Boustead? Subscribe to Durian Finance for more deep value SGX gems.